Welcome to another episode of Retirement Planning with Harbin. And today we are discussing how to make use of your portfolios and how to benefit from transferring portfolio from one brokerage firm to another. Sometimes what happens basically once people have created portfolios with their preferred brokerage firm, they somehow seems to get married to that brokerage firm, and then they think that okay, it's a sin to actually transfer that portfolio stocks or assets out of that brokerage firm into another brokerage firm. So the first rule of thumb is that if you are trying to be financial savvy in your retirement, you have to make of all the opportunities that come your way, even if that means you are changing your brokerage every other year or every year, okay, or 6 months, okay. It doesn't matter that you have to basically stick to one brokerage firm. There are a lot of brokerage firm in US, and there are a lot of good brokerage firm, and we need to understand that it's better to have less than 500,000 in a brokerage firm of a smaller brokerage firm than having more than 500,000 in a big brokerage firm, because if a big brokerage firm fails, your any amount above 500,000 is at risk, while even if a small brokerage firm fail, the amount below 500,000 will not be at risk. So taken that into consideration, what I did after the Silicon Valley Bank collapse, that looked for another brokerage firms or a couple of other brokerage firms to move my assets from Merrill Edge, where actually I have been banking and had my portfolios for more than 30 years. So what I did, I looked for bonus offers. So I found JP Morgan Wealth Management actually had a $700 bonus offer on opening of self-directed investment account. So first rule of thing is that I don't want to pay any brokerage fees for holding my assets. I'm an active investor, and if you are an active investor too, even if you are not an active investor, if you can handle your portfolio yourself, don't pay 1 or 2% commission every year to your brokerage by basically having them manage your funds. Like in retirement, most of the time you are not actively trading your stocks every day or even a couple of times in a year. Okay, most of your assets will be in type of mutual funds or basically a fixed assets like treasury, and for those type of things you don't want to pay anyone 1 to 2% of your annual income from that portfolio. So make sure that you invest in self-directed investment funds accounts and not managed accounts by the brokerage firms. So there's a difference, okay? The JP Morgan Chase actually had a $3,000 bonus for creating and maintaining $2,000 bonus for creating and maintaining a 250,000 balance in their wealth management account, but the fees for that is actually 1.47% every year, which doesn't make sense. And on top of it, they have so many restrictions and so many types of fees, which doesn't make sense. So you basically check and don't fall for that. Make sure that you open self-directed investment account where you don't have to pay anyone for your stock portfolio or your treasury bond portfolio, fixed income portfolio, mutual fund or anything. And for that they were offering a $700 bonus till April 13th 2023. I think it's a good offer. Basically, we have availed of it. We have opened checking and followed by we revived our checking with the Chase Bank. It was dormant. I had to go to the bank to basically provide two form of identification, and they basically made it. They activated the account, and then I opened a self-directed investment account and moved 250,000, actually 270,000 worth of fixed asset from Merrill Lynch into JP Morgan Chase. It took around 5 business days, 2 weeks actually, to do the whole thing. And I think I'm set for getting this $700 bonus. Once I get it, I'll actually inform everybody in one of the monthly financial health checkup. If you are interested, I think you should avail this opportunity. Get this $700, and after I think 6 months, you can transfer back to your own brokerage. By the time maybe that brokerage firm will actually give you a couple of $100 to just transfer it back to them. I did that with Charles Schwab and Merrill when the interest rates were very low, in like 0.1% or so. Charles Schwab gave $1,500 to move $1 million portfolio from Merrill Lynch to Charles Schwab, and then Bank of America Merrill Lynch actually gave me $700 to move $500,000 back after a year. So it's good way to basically keep moving your portfolio around. You don't lose anything, because if your portfolio is either stock or the treasury, they remain same unless you are selling or buying, and they don't change in value, whether they are with the JP Morgan Chase or whether they are with Merrill Lynch or whether they are with Chase. I hope you like this video. Please subscribe to my channel, like the video, and leave a comment.